rise, and of course we've seen this with the recent bids for Dimension Data, Nedbank, and more recently Massmart. Joining us now for more on the picture on M&A activity, of course, is Brad Weber, head of M&A at Standard Bank. Thank you so much for your time, Brad. Let's start off with the fact that a lot of companies, global multinational companies, have quite a bit of cash on their balance sheets. The global scenario, people are still talking about whether we'll see a double dip or not, but at the end of the day, there is a lot of value to be found in various companies as well. So people wanting to capitalize on this, do you think we'll be seeing a significant pickup in the months ahead?
Eleni, what we saw in the first half of the year was a significant slowdown. But in recent months, what we're seeing now is that the old world economies and the corporates in the old world economies are starting to look for growth again. And they're buying into the emerging markets, and South Africa and Africa in particular is one of those areas. And you're correct, there's a significant amount of cash around at the moment, and particularly the pricing we're finding is coming off significantly. So we are likely to see activity increasing now and into 2011.
Well, Brad, of course, we don't know just how much the HSBC plans to offer for Nedbank. We have seen what Walmart potentially could pay for Massmart, and it looks like quite a high price, particularly if you consider the rand is trading below 7 to the dollar. So that makes those acquisitions a little bit more expensive and a little more risky, surely, for international predators.
I think the rationale behind a Walmart bid for Massmart is not so much in a short-term vision. It's more taking a 20-year view on the African market. Yes, they're buying into Walmart, Massmart's existing South African franchise, but if you look at Massmart's franchise into Africa, it is fairly established but growing at a rapid rate, and I think that's the vision that Walmart has bought into. So they're taking a 20, 30-year view on our markets.
Well, that said, Brad, obviously they're looking for growth, as you alluded to earlier. Do you think that they could put a sweetener on the table, given the fact that we saw Massmart breaching the offer price already when it comes to its share price of above that 148 Rand a share?
It'll be difficult to say. I think it is a full price right now, but time will tell, and depends on the continued performance of Massmart going forward.
Well, Brad, outside of South Africa, what sorts of M&A pickup would you expect in other African markets? And of course, we know that the Nigerian banking sector has been undergoing some reform, and lots of companies looking at perhaps entering Nigeria at this stage.
What we're seeing from a Standard Bank perspective is a significant amount of interest from South American companies, particularly in the Brazilian area, and Asia. There is a lot of interest in Asia, particularly in the resources space, and then flowing off into the resources space, we're seeing infrastructure and food. Those are the two markets where we're seeing a significant amount of growth. India is interested as well in the South African and African markets, but in time we're likely to see more and more Asian activity, I think.
So you think a little bit of a focus is going to be taken away from Africa perhaps and more focus on Asia? It seems that there's a bit of a gap between what is being offered and what is being asked for when it comes to the merger and acquisition activity that we've seen on the African continent.
Yeah, the pricing issues have been an issue now in our market and globally now for probably 2 years. Although now, as we see more and more activity, it's clear that the pricing gap between buyers and sellers is diminishing.
Well, if you look, you mentioned South America and getting a bit interested in Africa. What would they be looking for? Because they have resources of their own to some extent. What interests South America about Africa?
Yes, they do have resources themselves, but at the same time, they have long political links with the likes of Mozambique and Angola. And again, just looking for growth activity in markets. Their markets, they still have opportunity in their own markets, but I think there's a long road to play in the African market. It really is the last frontier for growth for the global markets, and it's going to be an area where we're likely to see more and more activity.
Well, Brad, you mentioned various sectors of the economy on an African scale. Looking at South Africa, what do you think the next target would be? Because we mentioned iData, of course, Nedbank and the likes of Massmart now. Surely there's a lot of other sectors of the economy that many would be interested in. We know that Canada for some time now has been really interested in our junior miners. What kind of trends are you expecting going forward?
The mining and resources story will continue. It's not going to slow down at all. We're going to see a lot of activity in that space. But I think the other area which is becoming an interesting topic is the infrastructure space, to get particularly the construction companies and any suppliers into that industry.
Do you think that the BRIC countries are really going to be driving the M&A activity in Africa in the short term?
I think it's going to be more of a scramble from the old world economies and the new world economies. I don't think anybody at this particular point is winning the race. It really is a fight between Asia and the old world and the likes of South America for resources and infrastructure opportunities on the African continent.
And just lastly, also just looking at the funding for many of these new deals that are going to come to the fore. At the end of the day, we mentioned that a lot of these companies have cash on their balance sheets. Others are going to be going to raise funding as well. How do you see that scenario playing out going forward?
What we've seen as the world went through recession in the last 3 years is that a lot of companies downsized a lot of their activities, restructured their balance sheets. As you mentioned, some of them did rights offers, but have been watching their bank balances very closely. Coupled with that, banks through that phase were quite concerned about lending into the market. Now, as we start to emerge out of the recession, we're seeing banks flush with funding and looking to lend more and more aggressively. So it is an opportunistic time for the larger corporates in particular. We haven't yet seen the mid-tier market pick up at this particular point, but the larger corporates who have big, strong balance sheets, having raised funding during the recession, and now also having an opportunity to raise debt funding from banks who are relatively keen to lend into the market.